And I think for me, it's going into 2023. It's going to be my pick for 2023 again. I do think Bitcoin bottoms, but it won't have that significant move up that'll beat gold.
In 2021, Bitcoin soared to heights previously thought impossible. The cryptocurrency market was agog with excitement, and most traders were positive Bitcoin would continue the upward trend in 2022. Gareth Soloway was one of the few traders that predicted that Bitcoin was going to crash significantly in 2022. He had said the coin was likely to get to $18,000, and he was right. Gareth Soloway has come again to warn that Bitcoin is unlikely to outperform gold, and he has his reasons. First, he addresses the issue of inflation and the economy. So, let's listen to him.
I don't necessarily know if we're right in recession right now. I think there's still a fair amount of consumer spending. The jobs numbers, again, lagging indicator, but we're seeing the layoffs in these Fortune 500 companies almost every day, 10,000, 20,000 people. So it's coming. To me, it's like you see that huge tsunami wave out in the distance and you know it's coming. And I do think that, we'll be in a recession in 2023. It's just a matter of, is it the first half or the second half? But to me, there's no way, especially when you think about how the Fed got caught off guard again, saying it was transitory and it's not. Now they've overcompensated to the other side in terms of hiking rates. And I really do believe that they've overstepped again in this direction. But the problem is, based on what happened in the 70s, they're going to be very reluctant to back off and start cutting rates. And so what they're going to do is most likely stay the course, say they have to stay the course. And even when we get in a recession, they're not going to look to cut rates. They obviously won't hike anymore, but they won't be cutting rates for a significant amount of time. And what it's going to do is it's going to cause a spin out on the opposite side then. And it really feels like, I don't know if Michael gets this sense, but it seems like ever since the Fed's gotten involved in the economy more and more, there's always these huge bubbles and then these huge opposite reactions, right? And it kind of makes sense, right? The universe is supposed to come back to zero-sum game. And so when you have these monster bubbles, you have to have this reactionary period of negative growth to kind of compensate and bring us back to that level. But again, I'm not looking forward to those next few years. I think it's going to be tough. I think it's going to be a traders and investors market. But we're going to have to get through it. What's so scary, and again, I've gone over these charts in the past, but if you look at the chart from 1915 to 1930, and we know what happened in the 30s, it's almost identical from the chart 2000 to where we currently are just before the Great Depression. And I'm not calling for a Great Depression. I don't want to be one of those people that goes out that far out. But I think we have to be prepared for something that we haven't seen in a really long time.
What Gareth is saying here is bringing inflation under control is a prerogative of the central bank. In the case of the United States, this is the Federal Reserve. They have several tools they use in achieving this, and one of the most effective is using high interest rates to dissuade borrowers from accessing credit. This is meant to cut spending, and when spending is low, inflation is forced to recede. Unfortunately, despite one of the steepest rates hike in U.S. history, consumer spending is still very high. Data from the third quarter of this year shows that spending is actually on the rise. How is this possible? According to data released by the U.S. Bureau of Economic Analysis, consumer spending, which accounts for a third of the GDP, had remained resilient into the third quarter, despite the aggressive rate hike that started way back in May of 2022. Numbers from the BEA show that there is a 1.4% increase in consumer expenditures. On the other hand, the Fed's fiscal policies have been impactful on private sector domestic spending. A magnanimous 8.5% was cut from the spending of private companies and businesses in the U.S. While it is true that consumer spending is still high, care must be taken in the interpretation of this data. A breakdown shows that spending on food, energy, and purchases of vehicles are actually down. So why is consumer spending still high? A look at numbers shows that people are spending more money on services. Expenditure on services had increased by 2.8% by the end of Q3, with accommodation, healthcare, and transportation being some of the leading services in demand. As it stands, total consumer expenditure is $14.1 trillion, which was $13.9 trillion the year before. We are rounding up the year, and inflation has not significantly dropped from its 7.7% rate in October. The latest Consumer Price Index still shows that inflation is at a year-on-year rate of 7.1%. Gareth expresses fear that the Fed rates would most likely swing the economy into a severe recession. In his words, he is scared of what would happen to the economy in 2023. Due to the ailing economy, people have been asking, what is the best investment hedge? gold or cryptocurrencies? Gareth answers this next.
When I talked about gold being the best performer, it was versus the S&P and Bitcoin, and it looks like it will be the best performer between those assets. And I think for me, it's going into 2023. It's going to be my pick for 2023 again. I do think Bitcoin bottoms, but it won't have that significant move up that'll beat gold. And I think, again, now that you have the Fed going to the sidelines, or at least moving in that direction versus hiking dramatically, I think that's going to be a benefit. It's going to keep the dollar from really screaming higher, in my opinion. So I think gold will surprise people. And again, I'm a student of history, and Michael, I know, is as well. And if you go back to the 70s, whether you say it's not quite equal to that, what we're going through now or not, it's very clear what gold did. And it had the same sort of kind of initial move up from 2018 to 2020. Then this period of consolidation, even when inflation was soaring in the 70s. And then finally it played catch up in the late 70s and going, actually, I think it was close to a 10x back then. I don't think it does 10x now, obviously, but I still think that gold is a hated asset. I love assets that are hated personally. I think that's where money is not in yet, and that's where it will flow and kind of push itself up. So I think gold could be much, much higher, well above the all-time highs in 2023. Being a trader, it's looking for these big dumps. I'm actually looking right now. I'm beginning to short the S&P 500. I'm not really doing much ahead of the Fed, but for the most part, I'm looking to short the S&P, getting ready for the downshift that I think is going to come. Looking to short Apple. I think Apple has a major trend line. I think it's around 136 or so. If that breaks, that is going to be an epic break of a trend line. So I think that takes the market down by itself. And I still can't get over, and again, Michael, you probably remember this, back years before the Fed was really doing QE, PE ratios for companies growing like Apple, I mean, you were talking about tens, in the 10 range. And here we are with Apple at 25. Yep. And I just can't get over that long term.
Last week, Goldman Sachs reported that they expect gold to outperform Bitcoin in 2023. This report seems reasonable if we are to go by the performance of both assets this year. While gold did not make a profit this year, it actually fared much better than Bitcoin. While gold has been criticized by many for not appreciating as it should in the face of high inflation and growing fears about the economy going into a recession, the yellow metal actually held its ground better than most assets. Let's take a look at the numbers. In the second week of this month, gold was selling at $1,792 compared to its price of $1,783 it was selling at this time last year. This puts gold in the green. Gold could not match the 7.1% inflation rate, meaning it's still a bad inflation hedge as a lot of value is still lost. But compared to other assets, gold has still done well. What about Bitcoin? Bitcoin traded for an average of $16,800 this week, but last December, Bitcoin was trading at $46,800. That's a loss of $30,000 per coin, or a 64% price drop. While many expect the price of Bitcoin to outperform gold eventually, this may not be achieved within the next year. Instead, experts are projecting that gold will still outperform Bitcoin in 2023, and that is where Gareth says he would put his money. Like this video and subscribe to the channel to get the best cryptocurrency updates and for the latest analysis on the markets. Adios, and thanks for watching.